Hi guys, thanks for tuning in to another episode of Nuggets News. Well, a sea of red in crypto markets, it's always a bit of a worry when Tether's the only coin in the green in the top 10. Gold had another fantastic week and there's plenty of macro news to get through as well as all the crypto headlines, so let's get into it. We do welcome 700 new subscribers. Thank you to all you guys that are joining us on this journey, and we do welcome 20 odd new members into our premium area, and thanks to everyone that has left some great testimonials over on the website there if you guys want to head over to nuggetsnews.com.au and check those out. Into the macro news, where retail sales have dropped to levels not seen since 91, so even lower than during the GFC in the Australian retail sector. Now, that retail recession is getting deeper, so if you work in retail, let me know your thoughts and comments below. Is the bottom coming soon, or is this a trend that is going to continue in our consumer-driven economy? Even more worrying is the fact that the ATO did give us these tax rebates to the tune of $1,000, and something I mentioned was that a lot of people are going to probably use this to pay down their credit card debt or get ahead on their mortgage rather than stimulate the economy, which was the desired effect the federal government were going after, and that does appear to be the case in some of these initial reports that are coming out. This week we also found out that 40% of Aussies are living paycheck to paycheck, and it's basically not saving anything there for a rainy day. We just haven't seen that wage growth for 10 years now. Now, this was a big win for the banks over ASIC, the regulator. Now, this is going to make it easier for the other bank cases coming up. But basically, the responsible lending measures that banks were using, what the judge ruled was a lot of people, if they get into tough times, can cut back on what they're spending. So there's not a lot of point in assessing what they spend. They're going to cut back on their fine wine and Wagyu steak when times are tough. So always frustrating to see the banks continue to get away with it, particularly after Judge Ken Hayne clearly outlined in the Royal Commission that there was fraud and systemic issues, but the banks have got the win so far. The final story in Australia here was these pro-Hong Kong protests in a number of capital cities around Australia. I think these were relatively small in the scheme of things, but if you saw these or were involved, let me know in the comments below. But over to Hong Kong, where their leader has called for a run on the banks. So a few different approaches being taken here, trying to take a lot of money out of the banks, also encouraging people to convert to dollars out of the local currency in a bit of a protest. So a few different financial approaches being taken. A lot of people were saying that the next world war even is going to be fought in the financial space on the internet rather than a hot war. But this week we did get some news out of Hong Kong, $2 billion of stimulus on the way after another country that's had to cut their GDP outlook, another country that is slowing. And this is what we're starting to see. The ECB, people starting to talk about the next round of stimulus, QE, dropping interest rates, all that thing looks like it is growing closer every day. Now, some more bad news out of China, where their credit engine again is breaking down. So a few charts here, but Martin North and I talk about the credit impulse. Not only does the debt have to continue to expand to keep the economy going, but the rate of growth has to continue to accelerate. So when this credit pulse is decelerating, this is something that can unwind the economy with consumers burdened by debt. Now, China did reject Trump's peace offering and they're vowing retaliation. We seem to be reading these headlines every week. Look, if we get a resolution, stock market's probably going to love it and we're going to see a rip your face off rally, as they call it. But for the time being, it seems like there's no resolution in sight. China are going to devalue their currency. Trump's talking and tweeting against the Fed. But it's not all bad. So US retail sales are continuing to grow, only at 1%, but above expectations. When you compare that to Australia, their economy is chugging along okay, apart from manufacturing and a lot of those other sectors. Now, Trump did tweet about China and Hong Kong, the Fed being responsible for this yield curve. The next story here that I want to mention is this media blackout. So normally all these Fed talking heads, they come out and they jawbone and they talk about how great everything is and calm the markets down if they're falling. It's all just this big game. But Powell has ordered a media blackout for all Fed staff. So something I don't think I've ever seen before. Let me know what you guys think about that one there. Another article coming out of the US was former Bernie Madoff whistleblower now attacking General Electric. So Bernie Madoff, Enron, one of the biggest Ponzi schemes in history that went bust. But General Electric is a blue chip company, and I've spoken on the channel about these different accounting methods that are all fancy and push debts aside and make the balance sheet look really great. All these algorithms. I did an episode on it this week about how high frequency trading and computers run the markets these days. It's all about these keywords and different accounting metrics. So let's see if anything comes of this, but that would certainly be big headlines if GE has been doing the dodgy there. Now over to Europe, where Germany, again, on the brink of recession. So their economy shrinks in Q2. Look, they did have another contraction back in 2018, but Germany is meant to be the powerhouse of the European economy and just another country, particularly with that car manufacturing we've been talking about, that is slowing down. Now, another stat and just another piece of evidence here is the air cargo performance slumping across all European airports. So we see this big sharp decline back in the GFC. Look, we have had other falls in the past, but this one is starting to look pretty nasty. There's just no manufacturing and transport going on as these economies slow down. Now, one of the things I've been speaking about a lot is bonds and these yields and the number of yield curves that are inverted or negative the whole way out. So what we see here is that the US is still getting a relatively good bang for your buck. Now, there's a few outliers here because of some of the ECB actions, in Italy, but it really is crazy looking at all these negative yields. And what we're seeing is countries like Argentina say, well, we'll issue a 100-year bond and give you a better yield. And a lot of investors bought into that. But what happens when things get worse, as they did this week in Argentina with a big currency devaluation? Well, this fund lost $720 billion because even if they pay you back, it's in a currency that's now 20 or 30% more worthless. So these bonds, they go down in price. So big loss there for a bond fund that bought those 100-year bonds. Another good stat here showing that the percentage of yield curves around the world that are now inverted, hitting over 50%, the highest since back in the GFC. And I seem to be saying that sentence a lot. Now, what that has led to is the US now having 94% of positive yield. So everywhere else, you're looking at negative yielding bonds, and all this money is going to the US. It's making the US dollar really strong at a time when the Federal Reserve have said they're not going to cut rates. Their rate cut was a one and done mid-cycle adjustment. So if they do cut, and I think eventually they're going to have to go to zero, it's going to, again, put egg on their face. They've lost credibility. Something they've said they're not going to do that they turn around and end up doing. And this is why people are losing faith in central banks. They seem to be flying blind and just making this up as they go. Now, I did a detailed video about the stocks, bonds, Bitcoin, how I think it all relates to each other, and a big explanation of the inverted yield curve during the week. So please check that video out if you haven't already. Now, the final piece of information I wanted to talk about here was this CEO to worker pay ratio. So back in 1980, 30 to 1. The CEO of a company might make 30 times as much as the average workers in the bottom of the chain. Now, 300 to 1. So everywhere we look, inequality is becoming apparent. Even the Fed have admitted that what they did led to inequality. This is why we see geopolitical tensions and the rise of different idealisms. But in what world do we live in where particularly banks in the financial sector, what are they doing that's productive for the economy? Do they deserve to get paid 300 times as much as the average worker, wearing a nice suit and shirt at their keyboard and looking at numbers on a screen, compared to the farmers, the average guy out there that's working long hours and can't keep up with the cost of living? This theme doesn't seem to be changing anytime soon. Now, into some more positive news, the crypto news, where co-founder of Horizon State, Jamie Skeller, has returned. So they've had a governance revamp. They've got 8 individuals helping to expand the horizons, pardon the pun, for Horizon State. They've got a working product and producing revenue now. So yeah, a project that I've been pretty supportive of, and it's great to see Jamie Skeller returning there. Power Ledger successfully completing that KEPCO trial over in Japan, demonstrating that peer-to-peer surplus energy can be traded with their software and what they're doing. So hopefully this leads to more partnerships, more trials. I am having the Power Ledger team on the channel soon. I've got a long list of questions you guys have been asking, so let's hope that one comes about pretty soon. Brave browser, 1,200% increase in registered publishers over this year. So Brave are actually targeting the non-crypto content creators, which I was really surprised. I actually sat down with the team over video chat and had a great discussion. So this is one of the few projects that's going really well that's actually targeting the non-crypto crowd. I'd encourage you all to use that Brave browser. Now, speaking of advertising, BitMEX have got in trouble here with the UK regulator for this ad that they published 10 years on since the Satoshi white paper and Bitcoin came out. And what they're saying is that this chart here misled investors because it's a log chart rather than a linear chart. Because of the exponential growth of Bitcoin, they're saying that this little pullback here is very misleading because it doesn't look big on the chart. Well, if anyone out there can tell me that Bitcoin's price has not been exponential over 10 years and that the recent pullback means that it hasn't gone up over 10 years, I just don't see this logic at all. I'm sure BitMEX are going to fight that, but UK Advertising Standards Authority, I think they've been a little bit pedantic there. Now, Barclays Bank are no longer working with Coinbase. We recently see Tether in the headlines and Bitfinex, but I honestly think that all their issues have come about from not being able to have good, trustworthy banking partners to serve all their different clients in different countries. So when we see someone like Coinbase, one of the most reputable, trustworthy out there, not being able to work with Barclays, it really starts to raise questions about, what's the bank's agendas? Is this anti-competitive? We've seen it in Australia. Coinbase have already got a new banking partner. We've seen Litecoin buy a stake in a bank. But are some of these exchanges that are now very wealthy, with all the banks tumbling and their share prices low, are they going to just buy banks up so they have a financial partner to work with? Another interesting thought experiment there. Now, that hasn't stopped institutional investors depositing between 200 and 400 million a week, Coinbase are claiming. So every time we've dipped below 10,000 recently, it seems to be brought up pretty fast. We've had a big run up off the lows. We know that there's institutional demand and new investors out there. So maybe that's another stat that's making everyone a bit more comfortable that the bottom is in. Now, in terms of Craig Wright and the BSV court case, the judge has thrown it out, and I love this quote from the judge: "Oh, what a tangled web we weave when we practiced to deceive." So I know there's some BSV guys out there that watch my videos, and they're probably going to comment on this, but every piece of evidence out there is pointing to Craig Wright being a fraud. So I'm not sure how we can continue to believe that even a judge is making it up and just not believing all the evidence. But let me know your thoughts below. Now, Veritasium was the victim of another lawsuit from the SEC. So this was a project run by Reggie Middleton that I was really excited about back in 2016. He was promising that you'd be able to trade Apple shares to Google shares in a decentralized manner, create your own trading pairs. And this was before the word STO was even a thing. So project, I love the concept. And then it became pretty clear in 2017 that it was all smoke and mirrors and they'd made no progress. So, I said very publicly that I'd sold my position in Veritasium and hadn't developed how I'd liked. I hope none of you got burnt by this one, but if a project isn't making good development, you've got to bite the bullet and get rid of it, guys. No emotion. A lot of good projects out there are down just as much as the bad projects, and you can reshuffle your portfolio, take that longer term view. Now, Litecoin is another one that I've actually lightened up a little bit on recently. We didn't get a huge run up right into that halving event, but we did have a great run from that $20 bottom when I did the video to over $100. So make the most of that. I still like Litecoin for the really long term. I still own a little bit, but not as much. And the Litecoin Foundation have addressed a dusting attack. Now, if you don't know what that is, it's when an attacker sends out a lot of transactions to different addresses in really tiny amounts. And then what they wait for you to do is spend your Litecoin, and all those unspent transaction outputs in your wallet go together to make a transaction, and they can then link those addresses and say, well, we know that is that person because they owned that other address from an exchange. So I guess you'd call it a tracking attack, a way for people to monitor who owns what there. Another cool piece of news here was Chainzilla and Pundi X. Now, this is a retail point of sale system that allows users to buy and sell crypto, in retail stores. So enabling Bitcoin payments in Panama there. Look, I think long term we should be aiming for direct adoption of Bitcoin and other cryptos. So I'm not sure if we need these intermediaries in these hardware products, but in the short to medium term, I think it's a very cool concept and idea. I know a lot of you are interested in Pundi X. Now, this was another good article about all these companies and corporates that are launching their own coins. So something that I've been talking about for a while now. We've seen Libra more recently, but I think this is going to provide a lot of competition for a few of the cryptos out there that are trying to be payment systems. And I also think that if it succeeds, it just leads to the second tier of corporations and businesses all saying we're going to issue our own coins. And that can add to a retail mania and speculation in the next wave. Now, Xspring have given away $265 million in XRP to content creators, and this is a platform called Coil that I actually installed the other week. So this is a streaming payment system where you can choose to reward content creators and basically use microtransactions in the background. So it's a pretty cool concept. A few other projects are trying similar things. As an XRP holder, what do you guys think? Are you starting to get fed up with a lot of these giveaways, dilutions? Do you think this is a good partnership that's worthwhile for the long-term traction and liquidity? I've heard a lot of mixed opinions this week, so let me know your thoughts on that one. Now, I did touch on this last week, but it does appear that this class action is going ahead against Ripple. So disgruntled investors, yes, it hasn't performed well in 2019. Yes, it's still up a long way from 2017, but the reality is that I just want you guys to be aware that there is a class action against Ripple. Now, two projects that I own personally, and I've been pretty passionate about: Digex, their gold platform, and MakerDAO, that stablecoin. So they've partnered up with Monolith, which is a Visa debit card. It's a pretty cool looking card. Hopefully this is going to be pretty used widespread in the UK and then other regions. But this startup here used their funds to earn interest with a few of the different options that are available. So they turned their 17 million at ICO into 25 million worth by riding that bull market and taking out the DAI loans with CPDs, as I've spoken about there as well. So really cool to see that project finally gaining traction. Let me know if you're in the UK, if you're going to get one of these cards. Be super interested to hear if you can spend your gold in future. Now, Engine, fantastic gaming project, making a splash here, entering the Japanese market with Hashport. So these guys are a accelerator startup. I think Engine have got so much going for them. The gaming space in general, I've reported on another space that's really fast growing, and I think Engine are probably, you'd have to say, nearly the leaders in that gaming space now. Now, the upcoming Ethereum hard fork, the devs have agreed to 6 changes. So this Istanbul hard fork is coming to the Kovan test network first, and then hopefully Q1 2020 for mainnet. Now, one of the possible additions is this programmed proof of work, getting away from ASICs dominating the network. But again, this is something that's becoming a little bit contentious, something we need to be mindful of if the community decide to implement that before the proof of stake changes. Now, the big news this week was Bakkt coming out and saying that they're cleared for launch next month. So it's been soon for over a year now. It looks like the all clear is for September. Is this going to be enough good news and a catalyst to turn the markets around and give us that next leg higher? The same week we did get the SEC postponing those 3 ETF proposals. But what that means is that ETFs will either launch or die in October. So I think this could be something that, depending on the sentiment at the time, causes markets to panic a little bit. If their thinking is we're never going to get this ETF, yes, they're going to reapply if it doesn't get through, but that timeline just extends out. I don't think there's any reason necessarily for the SEC and the CFTC to give this the all clear. There's a lot of volatility, a lot of bad things happening in the crypto space still. I don't think we need an ETF to succeed. I'd actually rather we have another 4-year wave of growth and education rather than rely on that ETF. And I think Bakkt and a lot of these other funds and products are going to fill that hole relatively well in the meantime. Another interesting story about crypto investment came from Australia, where they're reporting that 100% crypto retirement portfolios are illegal. So this was actually originally reported by Mickey, who we've done some work with in the past. And they're saying that they did speak to someone at the ATO. They've issued warning letters to 18,000 Australians who have self-managed supers who have more than 90% of their retirement funds in a single asset class, such as property or cryptocurrency. Now, I would have thought that the majority of self-managed supers have got 100% in shares or 100% in property. Look, I know we've been big supporters, and New Brighton Capital are a sponsor of our channel, but we've always encouraged, responsible investment into crypto, a small percentage in Bitcoin long term. Altcoins are so risky, and unfortunately, people have found that the hard way. And there's a story here about people investing in scams in their super, so we don't want any of that stuff. I want to clear this up. I've reached out to a friend of mine at the ATO. I'm going to have Mike on to talk about this week because I can't find a law anywhere that states about this 90% rule. If you know more, let me know in the comments below. But speaking of scams, we did have that $3 billion Ponzi scheme over in Asia, dumping huge amounts of Bitcoin, ETH, EOS, and other cryptocurrencies. So whether or not this was a bit of scare tactics, whether or not they traced them and the accounts shut down these movements, we don't want these dumped on exchanges and bring down the price, but it certainly puts a lot of fear in people when they hear that $3 billion is making its way to markets to be dumped. Now, a sentiment poll that I did was talking about Bitcoin's price at the end of the year. A lot of people agreeing that Bitcoin is in no man's land in this range, 10 to 20,000. Now, at the start of the year, I did a similar one, and a lot of people thought Bitcoin was going to be between 3 and 6. Maybe 10K at the end of the year was something they were hoping for. And, just weeks later, we raced to 14K. So I think that new all-time highs are definitely still within reach, unless something really fundamentally changes. We know these markets only take a few days, a couple of weeks, a few good news announcements for that sentiment to turn on a dime. And sentiment's been pretty bad this year at a time when we're actually still above $10,000. Now, as we get into the altcoin technical analysis, I did want to just mention these leverage tokens that have come out on a number of exchanges. So when you see something like the Cardano 10x token, a lot of people think, wow, I'm just going to buy that 10x long token, and when Cardano goes back up in the future, a year from now, I'm going to make 10 times as much money. But that is not how it works. These things are super risky due to volatility. You can still use them, and I did a detailed rundown of how I believe you can safely use these leverage tokens and ETFs, because a lot of people don't understand how they work, what's happening on the back end. So if you want that detailed analysis, head over and become a member. Okay, into the technical analysis, and Bitcoin on the daily chart here, it has just sort of had these bounce and these cascades lower. Now, it hasn't been on big volume. We've been looking at the 23rd of August for that final date, but zooming out, we've just been in this tightening range ever since that big run up. We knew we're overbought on the daily. We knew we need to cool off. The RSI is around this level historically, which has been a fairly good buy. There's been times in the past where we have dipped into oversold on the daily RSI, even in a bull market. So look, if we have to have a look at a few of these key levels, we've found a lot of support around 9,000 a couple of times now. We know that there's another level of support down here at around 8.8. And again, in the low 8,000. So look, are we going to spill there directly? Are we going to chop around? I think we're probably due for a green week just because of how bad sentiment is and how big a red week we've had there. But look, zooming out, this is all pretty healthy. Look at this here. Every time we have touched these moving averages on the weekly time frame, we've got buyers waiting to step in. Maybe it's those institutional clients Coinbase are talking about. But when we had this huge run and got to 14,000, I think I literally said that people are going to wait and buy these pullbacks into the moving averages, and this is exactly what is playing out. So yes, we have to be nice and patient. At the moment, we probably want to look for the 4 hour to overcome these moving averages and flip from resistance into support. But I know it's been a bit frustrating, low volume, choppy action. Altcoins are really taking a beating. Ethereum is the one that I'm watching to get a good feel for whether or not alts are going to turn around. And at the moment, look, maybe we've just made a little higher low there, but there's just not any volume and conviction in any of these altcoins compared to BTC. So maybe it's the end of year. I know a lot of people don't want to hear that for altcoins to really have their run again when Bitcoin makes new all-time highs. That's it for this week, guys. I hope you've enjoyed this video. Smash the like button, subscribe if you haven't already, share these videos around, and thanks for tuning in. Talk to you again soon. Cheers.